As we begin 2025, Tesla, often heralded as a leader in the electric vehicle industry, has experienced a sharp decline in its stock price, attracting significant attention from both investors and the general public. The latest quarterly figures, along with the company's annual delivery numbers, appear to have fallen short of market expectations, creating a wave of concern among shareholders. Today, I will provide a detailed look at the factors behind Tesla's sudden stumble in this opening week of the new year, along with several points investors should keep an eye on moving forward. First, it is worth examining Tesla's Q4 2024 global vehicle deliveries, which reportedly reached approximately 495,000 units. While this figure represents a modest improvement over the approximate 463,000 units delivered in Q3, it still did not meet some analysts' projections that had exceeded the 500,000 mark. This shortfall has led to disappointment among market participants, which in turn has contributed to Tesla's recent stock movement. Compounding this issue is the fact that Tesla's year-over-year deliveries have declined for the first time in quite a while. A company that once maintained annual growth rates of over 50% now appears to be experiencing a slowdown, prompting questions about whether Tesla's expansion can continue at its previously extraordinary pace. Even so, overall demand for electric vehicles remains robust, meaning that Tesla's challenges may lie in preserving its position in an increasingly competitive environment. For a clearer understanding, let us compare some of the key Q3 and Q4 figures. In Q3 2024, Tesla produced roughly 470,000 units and delivered around 463,000. By Q4, production dipped slightly to around 459,000, yet deliveries increased to roughly 495,000. This pattern suggests that Tesla made strategic use of logistics and inventory to push vehicles out to customers, even though the actual number produced was somewhat lower than in the prior quarter. Some commentators also note that Tesla's energy storage deployment rose significantly from around 6.9 gigawatt-hours in the third quarter to about 11 gigawatt-hours in the fourth quarter, highlighting the company's ongoing diversification efforts beyond electric vehicles alone. Several factors have been identified as contributing to this sudden drop in Tesla's stock price. The first involves intensifying competition within the EV market. While Tesla was once the undisputed leader in electric vehicles, various automakers, notably those from China, have caught up through aggressive pricing strategies and a more extensive model lineup. The second factor pertains to macroeconomic conditions. As interest rates rise and concerns about inflation persist, demand for higher-priced vehicles can diminish, especially if government subsidies and support for electric vehicles are dialed back. A third consideration is Tesla's own internal strategy. Observers note that Tesla has heavily invested in new factories, research and development for autonomous driving, and other long-term projects, possibly leaving less room for immediate production growth. Finally, investor sentiment has been shaken by the fact that Tesla's once exponential growth may not be as inevitable as previously assumed, prompting some to wonder if the company's earlier meteoric rise was a temporary phase. Looking ahead, there are several points to watch. Tesla's production efficiency and potential new model introductions could play a decisive role in whether the company manages to reignite its delivery growth. Significant advancements in self-driving technology and possible robotaxi services could also allow Tesla to re-establish itself as a game-changer in the automotive landscape. Meanwhile, shifts in government policy, whether through incentives or regulatory frameworks such as the Inflation Reduction Act, may significantly alter the overall attractiveness of electric vehicles, affecting Tesla's competitiveness. The company's path forward may hinge on its ability to navigate these external factors while realigning its strategic priorities. In summary, Tesla's third and fourth quarter 2024 numbers reflect a mix of positive and negative signals. Delivery figures rose quarter over quarter, yet production slipped slightly, and the first annual drop in deliveries in some time has underscored a sense of unease in the market. Although the electric vehicle sector as a whole still holds enormous potential, Tesla must now demonstrate that it can overcome intensifying competition and evolving economic conditions. Whether the company can leverage production gains, new product launches, or technological leadership in self-driving to recover and sustain its growth remains to be seen. Thank you for joining the Wealth Curve for this overview of Tesla's recent performance at the start of 2025. If you found today's news helpful, please consider liking this video, subscribing to the channel, and sharing your thoughts in the comments.